Good afternoon, all. CamelbackTrading.org coming to you this Thursday afternoon, February 2nd. And we are looking at Window Trader's market profile of the ES and SPY. So let's just put into context what happened during the afternoon. Don't think the market, it's all over for the bulls. Okay? We had a very strong rally yesterday afternoon after the Fed. We had a strong overnight. The overnight was long, and we were long all morning. Okay, so all that happened was a pretty nice liquidation break in J, K, and L. We held the low. We actually rallied back to get 9 wide at I's low. So yes, we filled the gap. Yes, we didn't hold the trend day up. But that doesn't take away from the fact that the bulls are still in control on all 3 time frames right now. Think about it. After a day like yesterday, you would expect consolidation. We didn't even consolidate. We went higher today. So again, there's a lot coming out. I think one of the earnings came out. I mean, Apple isn't until 4:30. But looking at the way the market moved, I'm assuming either Google or Amazon came out. I don't know. But look what they did. Got close to today's high, and now they're coming back in. But regardless of that, that's why tomorrow night's close, after all those big earnings, after the non-farm payroll, after everything is digested from the week, we'll see where we stand. But for now, we have an inside month up. We're up on all 3 time frames. Remember, all of last year, the market was only up in all 3 time frames for 5 days in like August. Okay, that's it. Saw the day very well. Had a good day. Took a small loss on that pullback because I thought initially we would fill single prints, get to value low and everything, but I thought we would hold C's low. So I didn't get tremendously hurt. And then after I took off the long for a loss, I did well. Again, got back in K, L, and M for longs to take back whatever I had lost on that trade. And prior to that trade, I had had a good morning. I had nice longs in A period. Then I had a short in A period right before the turnover. I thought we were going to break A's low. It just had that feel to it. I did well on that for a quick trade. I was long in B period to pop above the opening, but I missed the big pop, unfortunately, on that. C period, I took a short, thinking that the first time we're not going to run through 4,200. That worked out. And then on pullbacks, I got long in D. Same in E. Everything else was long. D and E were long. And then, like I said, I did well on longs in I period on an ebb and flow. And then again, I started, I didn't take it in J. First one was in K. Lost money on that. It wasn't a big loss at all because I didn't take the bigger piece until it was down around the opening or right above it. So I didn't lose a lot when I took it off below C. And then, like I said, between K, L, and M, got that all back in some more. So not a bad day. The big part of my room is explaining what is happening. Think about it. Basically, this was a liquidation break. And I'm going to show you on the chart when we get to it, on the 30-minute chart, what had been happening prior to that. Now, I was a little surprised they did that much, only because when we had some good two-sided trade here, and then I popped pretty good above 4,200, and J made a new high. So I thought they did have some legs to get going possibly, because ES has a gap up at 2075. I thought they had a chance to get that. And then all of a sudden they reverse. I'm like, okay. So I didn't expect, but I did not get long at all on this whole push until half back the first time. So stayed out of trouble on it. And I'll show you that 30-minute chart, what I'm talking about in a second. As far as destinations, on the upside in SPY, we have 418.31. And then there's nothing to 419.96. I might have given that wrong yesterday. 419.96 is a weekly high and filling the gap at 421.22 from August of last year. For the downside, we have 9 wide today that we got to late in the day. 416.68, that's I's low. Today's low of 412.88, and you should have everything that I gave you from yesterday. ES downside, 92 is 9 wide, I's low. Today's low of 53.25. Now I am carrying forward 46.75. We were 18 wide overnight. I'll carry that forward because we didn't get it yet. Anything 15 wide or more overnights that don't get hit, I carry forward. Upside, we have today's high of 0850 and then fill in the gap of 2075 from August 22nd. 3675 is 10 wide from 819 of last year. Now, let's go to the charts. But look at this. Look how they pushed all the way up to the high, and now we're pushing all the way down. The emotional trading is mind-numbing. We've had, if I'm not mistaken, 22 trading days this year, and we've had 12 gaps, either higher or lower. You think we've had emotional trading? Now, let's get to the charts. So again, monthly, I'm probably going to start going up on it, okay? I mean, because we took out the balance high of 411.73. We stretched it now to 418.31. So officially, I'm going to call the monthly up, okay? Because 4 months ago, came into balance. Then we took out that previous month's high. Then we had an inside month. And now this month has blown above these 4 highs. So for now, the monthly is up. Look at the trend line from the COVID low. See if we're going to get it back above that. But we are above the lower high trend line so far. So the monthly is up. Weekly, up. One time frame and up 5 weeks. And the daily, clearly up. Okay? Now, and look at this, by the way. I told you our trend lines are starting to turn. The 20 went over to 50 and 100. And now the 200, I'm sorry. And now the 50 is crossing positive over to 200. Now, here's what I want to show you on the 30-minute. Markets don't go bull bear in any time frames. So here's the Fed yesterday. Look at that. We're in balance. J period, boom, came out of balance down. K period, tried to push the balance lower. I'm sorry, down lower. But it put us back in balance. Yeah, I'll still call this balance. Markets don't go bull bear. Okay, bear bull. So you could have called this, or you could have called this balance down, a little more balance, and then up. But regardless of how you look at that initially, look what we did from the Fed. Bull, right? We went bull. K, L, and M and A, balance B, back to bull and C today, balance all afternoon, back to bull. So the market was getting pretty stretched out on the shorter time frame. And then what happened? Liquidation break. You went balance, boom, down to bear, and then back to balance. That's all that was. That's purely all it was. The bigger picture is this market and all time frames are healthy. It's good to get those liquidation breaks. It's good to shake out week longs. Now, what I don't want to do, and I know this is getting a little longer, but I want to show you something real quick, because this is where it's very important for me for tomorrow's close. Okay? I don't want to see bulls give up A and B's high from Fed Day. Because if you give that up, well, now you just took back this whole trend day and the price spike from yesterday. And then that would have meant today's gap not only failed and single prints failed. I don't mind if we take out today's low tomorrow to come into a large 3-day balance on the daily to shake out some more week longs. I don't mind that at all. But I really don't want to close tomorrow, say, below A's high from yesterday. That's all. It wouldn't be a disaster, but I think health-wise, to continue this bull pushing forward, it would be better to close above that. But for now, all 3 time frames are chugging along to the upside. Thanks for the likes and subscribing. I hope you had a good day trading. Enjoy your evening, and we'll speak prior to the opening tomorrow.